They're buying institutions bullish on crypto. A lot is going on in the crypto world, from the crash and rise of Bitcoin to the discovery of a new promising altcoin. It's been quite a handful. However, there has been one tendency that emerged last year, and this shouldn't be overlooked. What emerged? Institutions bullish on crypto. From banks to hedge funds, there's something for everyone. From fund managers to pension funds and everything in between, we've got you covered. If all I've been saying till now sounds like jargon, you can calm down and stick with me till the end of this video. This is one video you don't want to miss. I'll be explaining why institutional crypto accumulations can't be ignored, as well as what it means for all of us retail investors, so kindly watch until the end. Before we go further, please give this video a positive reaction and subscribe to the channel. First, let's talk about Goldman Sachs. Goldman Sachs is an American multinational investment bank and financial services company based in New York City. Recently, Goldman Sachs completed a non-deliverable crypto option trade with Galaxy Digital, according to reports. This was the first of its kind over-the-counter trade, and it's somewhat different from some of Goldman's other crypto trades in the past. For example, last year, Goldman Sachs traded CME futures, which are exchange-traded and did not pose any significant risk to the bank. However, with these customized OTC trades, the bank is acting as a principal in the trade, and thus has the risk on its balance sheet, so bankers are beginning to feel more at ease with it. This crypto market risk is the first move made by banks to provide direct, customizable exposures to the crypto market on behalf of their customers. Although Goldman Sachs didn't disclose the specifics of their trades, other banks, after hearing of Goldman Sachs trades, took it upon themselves to be a partaker. After all, if Goldman can execute such trades, why couldn't they? In a competition for market share, the last thing any of them wants is to fall behind their competitors. We can say that Goldman Sachs served as a great influencer for other institutes. They didn't spend any time bragging about it. All they did was that they added a crypto theme to their homepage a few days later and discussed the investment case for crypto and the metaverse. Now, let's speak about the influence of asset managers. BlackRock, an American multinational investment management corporation, is now the world's largest asset manager with about $10 trillion in AUM, nearly 7 times the size of Bridgewater. Last year, the corporation decided to take some steps towards crypto. They ventured into some CME futures exposure as well as job postings for VPS and digital assets. Individuals within BlackRock were also speculating on the potential of the asset management engaged in the scandal. It wasn't, however, an outright acceptance of cryptocurrency. Furthermore, Larry Fink, the CEO of BlackRock, hasn't always been a big supporter of Bitcoin or cryptocurrency, and he even indicated in the middle of last year that his firm hasn't seen much demand for it. However, things have changed dramatically in the last 2 months. In early February, reports came in that BlackRock was going to offer cryptocurrency trading services. If this ever happens, it means that the Bitcoin trading integration would be huge. Let's not forget that the organization manages over $10 trillion in AUM. It would be easy to buy crypto. The reports were simply rumors at the time, though, but you can bet that if enough of BlackRock's clients asked for crypto trading services, they would go for it. What is institutional buying? Institutional buying refers to any transaction that exceeds $100,000. This is because retail investors are not always able to buy Bitcoin in large volumes. To explain this better, let's talk about Coinbase's annual shareholder report. Its distribution and growth of trading volume for retail and institutional clients is something to look into. Coinbase had a retail trading volume of over $73 billion in 2020 and a trading volume of $120 billion for institutions. However, in 2021, the retail trading volume became $535 billion, while that of institutions became $1.1 trillion. The increase is quite massive and glaring. While retail trading volumes increased by almost 7.3 times, institutional trading volumes increased by nearly 9.5 times. You can find more proof that this institutional drive is happening on the Coinbase exchange. Glassnode examined the market's impact on the low levels of short-term supply. They simply look at the Bitcoin amount on Coinbase and how it's changed over the last 4 years. The balance was just under 650,000 BTC in March, which is over 37% lower than the high balance shown in April 2020. It's also worth mentioning that Coinbase holdings haven't been this low since December 2017. Glassnode points out that the quote is the largest exchange by BTC balance and a favorite venue for US-based institutions. Glassnode indicated that larger organizations are increasingly adopting Bitcoin as a macro asset. As prices and volatility in traditional markets continue to rise, large Bitcoin holders continue to add Bitcoin to their portfolio at these levels. If this wave of institutional adoption occurs, it would be a net gain for the crypto markets. This is because it is beneficial to the price. Unfortunately, cryptocurrencies can only gain mass adoption if the centralized banking system is comfortable with offering services to the crypto sector, and as much as we hate to admit it, we are still dependent on this. If you've been into crypto for a while, you'll be familiar with the issues that might be encountered when it comes to banking and other services. However, now that these banks and financial services providers are also running cryptocurrency services, they would understand better and be more accommodating to individuals involved in crypto. Aside from general access to financial services for crypto consumers, market conditions are typically improving. While crypto is still a highly volatile asset, there's no disputing that the volatility we're seeing now is a fraction of what it was previously, thanks to the liquidity provided by all of that institutional volume and market. Larger Bitcoin buyers or holders have a minor impact on Bitcoin price. This also indicates that large Bitcoin holders, commonly called whales, will have a larger time manipulating the market by conducting huge transactions, which were prevalent up until 2017 liquidity. This will also help in price discovery and more efficient markets, whereas previously there would have been big price disparities between different exchanges and trading platforms. Aside from the improved market conditions and the billions of dollars that the institutions have been pumping into the crypto market, investing in the crypto space helps to progress the technology, making it more usable, scalable, and appealing to adopters. It has also helped many projects become visible. Although we can no longer rely on open source contributions to advance the technology, this is when large development funds come into play. Finally, one of the advantages of these institutions adopting crypto is that we are less likely to encounter unfavorable government laws. The financial sector of any government is important and will be treated as one. These institutions have a channel to people they can influence in their favor. There is a vast sum of money available for lobbying. Given that these businesses make money in this space, they are also eager to avoid any kind of regulation that could put them out of business. I do not believe that these organizations or institutions have our best interests at heart. Indeed, some of the hazards associated with them, such as growing centralization and control, concern me. But it's also vital to be realistic about what is needed to progress in the crypto sector, which is just what they offer. There's no new frontier for institutional adoption that has already appeared on the horizon. After looking at the adaptation made by banks, hedge funds, and asset managers so far, the institutional environment is considerably larger. Now we've come to the end of this video. Thank you so much for sticking with me until the end. And if you enjoyed this video, then please like it and subscribe to the channel. Also hit the notification bell to get notified when I release new videos on hot crypto investment topics. Thank you very much. I'll see you guys later.